right, let's jump into it. It's 10:56 on Tuesday, 17th of March, and I'll start off with DXY here just because we're pretty much as sort of planned on that sort of weekend analysis, getting that sort of back test at the top side of this zone here. Of course, these things aren't sort of like, point to point, but it does give us a pretty good idea of where the sellers have been previously. And should we have a sort of successful breakout, which obviously needs those three parts, breakout, backtest, high, high for confirmation. We're in that sort of second leg at the moment. So we're coming back down here. In theory, given all things happening, and how strong this move up here was, we should have, like at a minimum, even if this is going to come down over here, we should have that third leg. Because that's, of course, the third deciding leg that I always sort of talk about. So we got leg one, breakout, backtest. This is the deciding leg. So this is what we're looking for today, a bit of US dollar sort of strength. Look, it's not sort of guaranteed that it's going to pull back from the, sort of push up from this point, but however, structure-wise, we do expect some US dollar strength because even if this thing is to fail, you'd expect a lower high, retackle the lows, and then come down like this. That would be the course of failure. Most of the time, you're not going to get an extremely sort of strong bullish move like this and then just sort of fail straight back down. I mean, never say never because, I mean, we look at previous times and it has had kind of moves like this, but realistically, you just got to expect that the norm is going to be that you'll get this sort of structure, which will be a second effort from the buyers, which will sort of push this thing up. And this is what's going to really tell us, is that if it's going to fail, you'll have a lower high, i.e. in the sellers, oops, let's make them, the sellers are here. If I can get the thing to click properly, whatever, we'll do the circle. The sellers are here, and then you sort of see them actively push down lower. That's the course to failure, but that still requires some short-term sort of US dollar strength, even if we are to sort of see this thing fail and come back down lower over here. Of course, that's not the base case. The base case is that we actually have breakout, backtest, we tackle these highs, and you break through, and it moves out like this. That's the sort of thought that we're probably actually looking for. Hence this little red line, backtest over the weekend here. Then you'd have something to this effect. Obviously not point for point, but the general idea of it all. So in both of these scenarios, you sort of still would expect this third leg to come because, of course, this will be the defining one. There's also the chance of being the double top, which kind of leads to a bit more of a range, but potentially higher, slightly higher to a downside move there as well. But all these sort of scenarios all pretty much are based on the idea that we'll get a little bit of US dollar strength if this is the depth of this sort of pullback. Just another thing to sort of consider with this, if we bring up the chart a little bit, if we were to look at this move here, we can then sort of say, what strength is the move at? Well, we pull the fib over there, and you can see that the back test has actually only come to the 38% at the moment, which is a strong continuation line as well. So should we sort of see a rally from this point, there's a higher likelihood that we will get that breakthrough. Should this sort of pull back down to the 61%, well, then it becomes a bit more of a question, and you're looking probably more in the camp of a double top to a lower high. But as it is at the moment, 38% retracement, back test of a known area, this is, should this sort of come up and sort of move towards tackling the highs, as we can see, I mean, it's very early days, but should we see this sort of push up here now, that's a very strong contender for continuation and continued sort of breakout, confirmation of breakout, and continued US dollar strength. All right, let's move on. Have a look at the gold here. So, look, we are sort of getting a little bit of a sort of break. It depends how you sort of really want to chop this thing up, because, I mean, let's actually get a couple of these things off here. It starts to get very, very messy around here. But we have sort of eventually got the break of this rising support over here, a little bit of a fluff around, breakdown, boom. We are finding a little bit of support here at the moment, but I think actually, if I put it on which chart, I think this is a better chart that we're using, or that I was using for it all. Lower time frame here, yeah, we can see this sort of tracked through the last week. Excuse me. Pretty much we're in this little range here at the moment. So it's a bit hard to sort of give direction, but we did sort of see previously, and of course, just because it happened previously doesn't mean the same, but if we do get that dollar strength, most likely we are going to see this happen here and break to the downside. Similar to this consolidation that we had into the end of last week. Let me start that again. Consolidation favors continuation, so we look at the direction that we came into this thing and obviously continue down. Now that won't happen forever, of course. I mean, eventually, sort of, you'll build a base and you'll come back up, and this is where you can use these sort of, angled sort of resistance. Basically, so you can sort of see that the sellers are moving down at this level here. Should this thing sort of come through and pop up above 50.30, 50.40 to be on the safe side, this is the kind of level that the course of action you're kind of looking for, because you'll be breaking out of this little sideways consolidation, you'll be breaking through this falling resistance, and you should see a little bit of a pop. Doesn't mean necessarily that you're going to come all the way back up to the top over here, but I wouldn't be surprised if we see a little bit of a squeeze up higher with there. That's not the base case of it all. I do think that, as I said, we'll see some continued dollar strength, and I think that's going to be weighing on the metals. So I am still looking lower with metals, but confirmation for this really probably come. Look, I would have said at this level here, obviously I had a band here, but let's put it here at the moment. So confirmation this will be under 49.70. And then potentially trades with backtest of the underside of that as well there. All right, keep on ticking on. Let's do these ones a bit quicker. So we've got silver. Silver's actually played out very well here. If we jump on that sort of high time frame, you can see that sort of move that really is starting to form with this play out here. The trade last week was obviously up to the 61%, as you can see, coming back down to this level here. This was the next part of the trade, and this is what we're kind of seeing at the moment. Obviously, sort of it was back there for an earlier move of it all, but comes down into this zone, retests the underside here, and now we're looking for a break and continuation to the downside here. So certainly underneath, you got to take out those wick lows. So above sort of below 77, you're looking at 72 for the next trade there, and you can see this thing developing pretty much exactly as we kind of sort of thought. Obviously, sort of this second move here was obviously a little bit later to the party, but because we had to come up to the 61% first. 61% buyers, resistance, tackle the lows, breakthrough. Breakthrough, support, resistance at previous supports. Now we're in this third leg here. This is the one that's going to tell us, are we going to keep going down with this? These moves eventually will sort of peter out. I mean, you're not going to go down to 20 or so. But the point is, for the time being in that, it does still seem in that sort of selling sort of mode. What I will kind of do is drag this along here, and this will be a time, like with the gold, we could sort of say that, hey, hold on, wait, maybe we're starting to see a reversal. But when you see a nice structure forming like this, with perfect sort of like 61%, break, retest, buyers held where they should have held, sellers coming in where the sellers should have come in, you can expect continuation. When it's respecting the chart, expect continuation. And so what we will do is we'll sort of put this sort of like falling resistance in here. And when it comes through this falling resistance, whether this be down here, over here, or even if it just rallies up now and gets a fast move, this could turn out to be a fake out and rallies up over there. It won't be realistically pretty much a buy till you back up above this sort of falling resistance here. So I think sales are still very much in the cards here. We could still consolidate a little bit down over here. And I think very much like gold, silver's going to be waiting to see what happens with the dollar. But if the dollar continues, I expect silver to continue to the downside as well. Okay, let's tick along. We've got Aussie. Now, Aussie, obviously we've got RBA today, and widely expected to sort of hike rates. And this sort of move up here is obviously sort of like, it's a couple of factors. It's one that, the dollar's just been sold off. Well, sort of sold off into the start of the week. So obviously, sort of like, as I've covered this a couple of times, but basically, in short, as the dollar sells off, the market's looking for like, where's the sort of best viable place in that? And you've got, obviously, the flows go everywhere, but if you revert back to sort of what the actual central banks are doing, RBA is hawkish, we've got high inflation, which requires a hike, we've got strong GDP, we've got low unemployment, we've got strong employment or strongish employment, it's not weak kind of thing. So those things don't stand in the way. It's also showing that sort of like output is strong. So the thing is, it's sort of like with these things. So the way that the central bank is going to look at it, they're going to say, look, okay, what of the two mandates is the leading thing, and what, when you sort of weigh up the other one, because they both sort of say, hey, look, we need to balance the two mandates, which is basically jobs and inflation. Well, not basically, it is, it's jobs and inflation. So what's the more sort of crucial thing at the moment? Well, if you look at one side, CPI, that's inflation. Does this require action? Yes. So inflation's way above target. It looks like it's accelerating. Obviously, this whole sort of oil sort of thing at the moment's not, or the sort of Iran situation flowing on oil, yada yada. That's going to add or exacerbate potential sort of inflation. So on the inflation side of things, do we need to act? This is how the central bank will look. Do we need to act? Yes. So how do they act with inflation? Well, with the lever they pull is to hike rates. So sort of slow down sort of spending, slow down borrowing, reduce in a way sort of cash in the system. Now the other side of it is obviously jobs, and you sort of think, okay, look, if the jobs are weak, so not the situation we've got at the moment, but if the jobs are weak, if output is low, would restricting capital, i.e., sort of hiking rates, bringing the money out of the system, would that hurt the jobs side of things and jobs as well with sort of output like GDP? Well, if the jobs are weak, then they're like, oh, geez, you know what I mean? Inflation's out of control, but the jobs market's weak and that. So if we sort of, you're going to burn one of them, one or the other. And if they're both on their ass, as in high inflation, low jobs, then they've got a tough decision. But we know that the inflation's too high. That means it requires some action, which is the hiking of the rates. But in the situation that we're currently in, we have strong employment, we have low unemployment, and we have strong output. So could the economy withstand a bit of a hike? Well, yes, because they sort of say that sort of like, that people are still hiring, people have still got money, inflation's out of control, which requires action. The jobs and that still seem fine. They're not on their ass. Bang, okay, hike it is. And this is why we've got such a high expectation of a hike coming through here. Now, I think though, sort of, the dollar selling off yesterday, obviously, markets like, oh, well, got RBA today and they're going to hike. Aussie moves back up. I think though the risk at the moment, and look, it's an outside risk, but the risk at the moment is that the RBA holds. And in their outlook of things at the moment, they're between a hike and a hold. So a hike is obviously hawkish, and a hold will be seen as a dovish move. Maybe not dovish, but not hawkish kind of thing. And this whole move up here is pricing in, or this whole reason that we're up as high as we are is because Aussie has sort of had a sort of stronger, more hawkish central bank outlook. If you take that away, if they go, you know what, the Middle East situation's a bit dire at the moment, and there's a lot of sort of risks out there, and we don't want to hike into that, uh, we may sort of wait and see. That's going to crush the Aussie because that's the thing that's holding the Aussie up. Now, that's an outside chance. That's not the sort of the market consensus with things. It's just something to be aware of. Most likely, look, they will hike, given everything that I said before. If they just sort of go, hey, look, you know what, we're far away from the Middle East, it doesn't, it doesn't not affect us, but they're not sending their warships over there. That's a them problem, and this is us problem, and homegrown inflation is the thing that we're tackling. Well, then we'll see a hike, but that's pretty much given. That's no sort of shock to the market. The market's not going to go, oh my God, they've hiked, let's buy up. No, the reason that they're still up as high as they are is based off that expectation. So it means that sort of you may get a knee-jerk reaction, but I think upside will be limited with Aussie should they hike because it's not a shock. The bigger shock, or say the risk, is that they hold against the market expectation of a hike, and then that'll sort of see Aussie get crushed to the downside. So I think from here, if they hold it, I think the move will be quite accelerated should they hold, but that's an outside chance. I think the sort of the upside should they hike is still going to be limited, and let's see what happens at 71 cents, which is obviously that big round number, bit of a sort of a pivotal point here. So I think 71 cents is potentially the upside target here, and I wouldn't be surprised even if they do hike. uh, that we get, if this thing will decide to click, a move like this and actually sell off afterwards. Because then we sort of go, okay, that's out of the way. What's happening with the dollar? And if the dollar's breaking out, well, just consider this as well. While the dollar was breaking out into the end of last week, what happened to Aussie? Aussie got clobbered. Not as bad as some other currencies, but because of the central bank outlook, we've said that, or I've said that. But it did lose 3% from its highs of US dollar strength, even with the high expectation of the rate hike coming. So the dollar sells off, Aussie moves back up, all very well and good. If the dollar breaks out and continues higher, the hike's out of the way because the big moves in these things are kind of expectation. The profits don't belong to the person who buys the position on the day once you've had the rate turn. No, the profits belong to the people that have been positioning themselves prior with this expectation with their own analysis. So I think, upside, it will be limited regardless. And I think if the dollar starts to pick up, I think some shorts from around 71 cents to really sort of tackle, 69, potentially even lower, depending how strong, how much the dollar does break out in the scenario that the dollar does break out. So I think Aussie's, obviously going to hold here. I wouldn't expect a great deal through this day, but definitely keeping an eye on what's happening with the metals and the dollar here. All right, and finally, sort of finish off with yen. So again, still got a little bit of a smackdown towards the end of last week, but as you can see, as the dollar rallies off, it's kind of like yen strength moving with dollar strength there, and we see the yen sort of coming back up here. This does seem to have been. This was actually, if you have a look on a lower time frame, it was a good sort of back test level, and obviously back up here again as well. This is where it needs to sort of prove itself back above to sort of say, okay, yeah, we're going to see some continued move up over here. 4 hour probably shows this a little bit better. As you can see, look, the RSI's got room to move with it all, but you can see that first rejection as the price went through here, whipped back down, closed underneath here. This is the level it needs to close above it. So even just take out that wick. So above, say, 112.60 or onward, upward. But should we see market be moving like that? Like as I said, it's a bit of a balancing act with the yen across the board at the moment because BOJ is obviously very dovish in that, so it's obviously why the yen is so weak across all crosses. However, if the market goes risk off and metals sell off, you're going to see the flows obviously into the dollar, but we're going to see the flows into yen as well, because that seems to be the sort of the second choice. Like it's not like everybody's going. I covered this over the weekend. Everybody going into the dollar. If you see that, well, dollar will go berserk. Dollar will have its kind of almost like its silver moment, and we'll see absolutely everything get crushed. I don't think that's going to happen. For that to happen, we're going to see equity markets get absolutely demolished as well. Um, so I don't think that's going to be the case, but I do sort of think that should we see market go risk off, which could see some downside in equities anyway, and we see the dollar rally, if gold is being sold off at the same time, I don't think all the flows are going to be going into the dollar, but I think the yen will still hold some upside here. Anyway, long story short, see what happens at this level here, this one, 1250/60. Targets down underneath sort of 111 sort of 40, 111.50. A breakthrough there. Well, you still got this channel to contend with, and this is really the sort of the bigger trade that you're kind of looking for. This one will yield quite a few hundred points should we see a break of this channel, which it has been respecting both bottom and top side for quite a while. So I wouldn't say that necessarily this thing's coming down here quite yet, but certainly in the short term, this 112.50/60 is where I'm sort of keeping an eye on. Just with this sort of one here, as I said, look, this is kind of like where you're expecting it to sort of come up. However, if we look at this in a sort of structure with the sort of three legs, yes, we got this little back test down, boom here. This has really just been sort of straight up. So for this to go higher, I would expect it to come up, come down here, maybe see a higher low, so we could see a progression up with the buyers from this level here, re-tackle the bounce high, which is still the same sort of level that we're looking at, that sort of 112.50, 112.60, come through here and then break up. That's how I sort of feel this thing will go higher. It could continue to sort of V-shape grind up like this. As I said, V-shapes aren't really the common sort of thing. You could see, so this is just a little bit of an example. We're moving down here. Here's the buyers, moves up,
resistance, moves down, here's the buyers here. And although it's only small, you can see the progression that they moved up, and that gives us, okay, this move down is kind of depleted. Now we move up, we tackle this level here, and it breaks through, comes up the top. Same sort of thing we'd be looking for here. A move down here to find some sort of like actual sort of visual sort of progression move off from the bias. This is fine, this is grinding up, but this, it could be profit taking, it could just be, which is basically sort of covering shorts, this kind of sort of stuff. You'd want to sort of see a continued sort of, okay, here's the seller's second effort, here's the buyer saying, hey, great, another option to buy it lower, take out that bounce high, and that would be the way sort of moving forward there. All right, I think that's about it. I think it's pretty quiet on the sort of data front and that sort of through today. As I said, RBA looking to sort of raise by 25 base point there, and then of course a press conference after that. That's about it in terms of data. All right, that's it from me.